the first 13, 14 years I was doing this, the first apartment deal I got into was 2010. I was 22 years old, and I just multiplied my own portfolio, with some friends, with a little bit of family stuff, but really just my own for 13, 14 years. And all we did was 1031. We started with 200,000 bucks and got into a little 8 unit in Seattle. And we literally just 1031, 1031, 1031, up and up and up, and built that portfolio to, being worth about $30 million. And over time, I was also working in tech, selling software,
Okay.
doing that on the side. So 1031 is like one of my favorite elements of this whole business. It's a little bit, there's a little more nuance when you have like a syndication, with an investor base. If we have 15 LPs in a deal, all 15, basically, the whole group needs to go to the next deal. So if we get to the finish line and we say, hey, we're ready to sell this thing, the initial equity that we raised for this was, $1.5 million. Today it's worth $2.6 million. Whenever we sell this thing after closing costs, we want to know if you guys want to all roll into the next deal. If like 15 out of 15 say yes, cool, we'll 1031 it and we'll go do that. If 13 out of 15 say yes and two want their money back, there's provisions that we put in the operating agreements, and it's called the PPM documents, the private placement memorandum, kind of explaining what's the process to buy people out. Before we sell, we'll get together as a group. We'll say, hey, do we want to buy these two people out so we can then carry on 1031 to the next? But if we can't get the whole crew to go, then it's hey, we're going to take our money, we're going to pay cap gains, and if you want to reinvest it, we'll go into another one.